Hello everybody, this is Robert from Hot Biotech Stocks, and today I have picked another company that has a compelling story and good chart setting. As you have seen in my previous videos, I try to connect the story of the company with the technical analysis to give you a full picture and also a nice entry point. So if you want to hear more, please keep watching. So the company that I picked today is Intercept. And before I start talking about Intercept, I have to inform you that, biotech companies have the highest risk rewards in the Wall Street. And if you can avoid the pitfalls with biotech companies, which could be that clinical data or secondary offering, there's a lot of money that could be made. And that's what I do in this YouTube channel. I try to present companies that have a good story and good entry points that we can avoid these pitfalls. So today the company I picked is Intercept. And they have only one compound named Aclivia, and this Aclivia is used for very hard to treat liver diseases. So it's a very little competition and big market opportunity for these difficult liver diseases, and that's what Intercept is doing. They have already an approved indication for this compound, which is in PBC, and they have also doing another study in NASH. And if you don't know what I'm talking about, I highly recommend you to go to my blog. There's an article about ICPT or Intercept that I've explained everything here. So, and I highly recommend you to get educated, read this article so you know exactly what's happening with the company and what the company is about before you invest your hard-earned money. So, in order to explain what happened, I have to bring the chart here for you. So this is the one-year chart for Intercept, and the company was flying high. I mean, this NASH and this liver diseases, as I said, they have a big market opportunity, and the market was betting on that Intercept could do a good job in this field. So the stock was flying around 130 as of summer of last year, and suddenly they saw deaths with their compound in this PBC indication. So after they reported the death, the stock started to come down, and it went up again, and it came down again. And here in this big chart, this is when the FDA came and said, and actually put a press release out, that doctors should be very careful when they dose these patients. And it seemed like the deaths occurred because the doctors were not following the dosing regimen in the label, and they're giving the wrong dose, and the patients were dying. So that caused the stock actually crash, as you can see, from 133 all the way to what? $60. That was 50% crash. And after that, this whole month, since actually October all the way to here, the street and the market was waiting to see what FDA would do and what the company could do. Because deaths are a very serious side effect. And if this Aclivia, the compound, was not used for life-threatening disease, I have no hesitation FDA would pull the drug from the market. And that's what the market feared, that maybe FDA will pull the product from the market and that would be a disaster. Or another option that FDA had was to put so much warning in the label that would be difficult to market the product. So in order to explain what happened, I have to go to 3-month chart, and here you can see this is from 2018, and here, after a few months passed and the market saw that, FDA is not pulling the product from the market, so market got really hopeful. They started pushing up the stock. And here on February 1st, this is when the FDA and the company made a joint announcement that they have sent out a Dear Doctor letter, and they have informed the doctors how to use the compound. So basically, FDA told the street that they're not going to pull the product from the market, which was good news. But again, right after this good news, the stock came down again because I guess market worried, okay, FDA didn't pull the drug from the market, but how about the doctors? Will the doctors still use this drug? So that's why, again, they were waiting for the company to see how they will report and how they will update about the sales of this compound. And that's what happened the other day. In February 14, company, they released a quarterly report and they informed the street how much the sales are, and And basically, it wasn't as bad as everybody feared. So stocks started to again rally again because all the bad news were out, and the street had some kind of visibility about the sales and what's going to happen in 2018. And so basically what happened is that the storm behind the Intercept is basically settled. Now the warning letter is out. Now that street knows that FDA will not pull the product from the market, so they can looking forward to 2018 and 2019 and plan ahead. And going back to the 1 year chart, the market was flying high, stock was flying high here because, again, they have ongoing study in NASH, which is another very serious disease with a huge market potential. And the study readout from NASH is going to come first half of 2019. So my guess is that now that the storm is settled in Intercept, I think the market will look forward to this NASH study results. So I think the market they're gonna push up the stock. So if I go to the 3 month chart, or let's do let's 6 month chart, I think the stock will, in the coming months, will easily go up to $70. It might push back again and go all the way to maybe $80, $90. And that's what I'm thinking. I think in the 6 months, you have a chance of making 30% of this stock and I wouldn't wait for the NASH study results. If you make 30-40%, you can just take the money and get out. Don't wait for the study results, because phase 3 studies are flip coin. Actually, there are lots of biotech analysts out there, and they can give you their estimate that's going to be successful. But I'm kind of a guy that, if I make 30-40%, I take my profit and buy another stock. So if you subscribe to my YouTube channel, I can give you another stocks like this. You can make 30-40%, 20% in a couple of months and be done with it. If you can do that a few times a year, you can easily double your money. So in order to explain what the near-term chart looks like, this is a 7-day. As you can see, I think the stock is stabilizing around $59. So if you can get in now, you can easily go all the way to $70, $80, $90. But let's go to 3 days, if the stocks goes below $59.50, I would get out. So you have what? Half a dollar, $1 downside with $30 upside. So I would call it a good risk reward. So get in now. If it goes below, again, 59, 50, 60 here, get out. Otherwise, wait. And hopefully, stock will go all to 60 and then hopefully all the way to 85. So after that, again, just take the profit and get out. And I can present another stock for you in the future with the same profile, and we can make another 20, 30, 40% on that one. So this is what I had for today. Hope you enjoyed it. If you liked the video, please give a thumbs up and subscribe. And if I missed anything, leave a comment. If you want me to look at some other stock, just leave me a comment. And again, I'm going to put a link to my blog, and I highly encourage you to read it. Again, thanks for watching and good trading. Bye.